Hello, everybody, and welcome to episode 2 of the Wealth Breakdown podcast. I'm your host, Billy Amberg, and today we are going to explore how buying tax credits can save you a lot of money. So here's the situation. I got a client named James. He's 45. He's married, filing joint for his taxes. He owns a logistics company that generates $3 million in profit per year. He pays himself $1.5 million in salary and cross salary and bonus, and then $1.5 million is retained earnings rammed back into the business for growth. Company's growing nicely, so needs every dollar he can get. So James pays $600,000 in tax per year personally, broken down as $75,000 state and $525,000 fed. $600K. The company pays $300,000 in taxes. So as of right now, James thinks that's a lot of tax. I tend to agree with him on that. He knows that he makes a lot of money, but still shocking to see hundreds of thousands of dollars go out the door every quarter when paying estimated taxes. So what do we do about this? Bloomwood works with the client's CPA and a tax credit firm like a Monarch Capital, which has offices here in Atlanta, Georgia, to reduce the tax liability with tax credits. So here's how it works. $1 of tax credit offsets $1 of tax payment, making them much more impactful than a tax deduction. Importantly, tax credits can be bought and sold. Tax deductions cannot be bought or sold. You can buy tax credits for 85 to 90 cents on the dollar. And again, that's an arbitrage opportunity because you're doing 85 cents for $1 of payment to offset $1 of payment. So James personally purchased $75,000 of tax credits for $63,750 and keeps the difference of $11,250, which is pretty nice. Otherwise, he would have paid that full $75,000. Now, unfortunately, James can only buy tax credits to offset the state liability, which was part of this, which is the $75,000 part of this $600,000 liability. The logistics company, however, can purchase tax credits to offset federal tax liability. The logistics company buys $300,000 of credits for $255,000 and keeps the difference of $45,000, which is pretty good. This is almost equivalent to the annual salary of a low-level employee in some businesses, that's a lot of money to save. So the result is that across all the professionals involved in making these savings happen, James and his company paid a total of $12,000 and saved more than $56,000. That's more than a 4x return on investment. And as a part of that $12,000, James is also getting ongoing financial planning, life planning, tax planning, and estate planning from Bloomwood. And he feels great knowing that we've turned over every rock and that we found a bunch of value for him. If you found this valuable or applicable, please click the Contact Us button below to answer a few simple questions and get scheduled with a Bloomwood advisor to discuss your unique situation. The information covered and posted represent the views and opinions of the guests and does not necessarily represent the views of Bloomwood. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for financial, legal, or tax advice. Always seek the advice of your financial advisor or other qualified professional with any questions you may have. Bloomwood is a Georgia and North Carolina registered investment advisor with its principal place of business in Atlanta, Georgia. Bloomwood and its representatives are in compliance with FINRA and state regulation in the states where Bloomwood maintains clients. Bloomwood may only transact business in those states in which it is registered to do so or is exempt from registration. Past performance is no guarantee of future results. Tax relief varies based on client circumstances, and all clients do not achieve the same result. This content does not constitute tax advice, legal advice, or financial advice, and does not create an advisor-client relationship between Bloomwood and the listener. This case study is designed to give you an overview of the impact that proper tax and financial planning can have on your financial life. The figures in this case study are not calculated to the exact penny and are designed to facilitate a conversation. Thank you.